Banks are supposed to be the backbone of our financial system, but right now, things are looking shaky. So, are we headed for a financial meltdown? We're gonna break it all down for you in today's video, from bank failures to economic impacts and how you can protect yourself. Let's find out if the sky is really falling or if it's just a storm in the teacup. Financial experts are ringing the alarm bell about a potential banking crisis brewing not just in the US, but across the whole Western world. It's like a bad sequel. Remember the 2023 bank stock panic? Here we go again, fueled by a toxic mix of unpaid loans on empty office buildings, rising interest rates, and a shaky economy. Experts are worried that a surge in vacant properties could be the next domino to tip, triggering a full-blown banking crisis. Europe's in the same boat, with Germany's commercial real estate market taking a nosedive and threatening its banks. Even historically stable markets like Ireland are seeing developer bankruptcies and stalled projects become the new normal. While some analysts say it's not a total meltdown, the widespread price drops are definitely cause for concern. Remember, not all banking systems are created equal. Unlike their Western counterparts, offshore banks and tax havens are more like safety deposit boxes. They focus on keeping your money safe, not taking crazy risks with commercial loans. Feeling nervous about your hard-earned cash sitting in a regular bank? Western banks love to lend out your money, which can be great for them, but not so much for guaranteeing your funds are safe. Enter the world of offshore banking, where the focus flips entirely to keeping your money secure. Think of these offshore havens like financial Fort Knoxes. They operate on a full reserve model, meaning your money chills out instead of being loaned out for risky ventures. Popular spots for these security-minded banks include the Caribbean islands and the Cook Islands. But these aren't just glorified piggy banks. Many offshore institutions have connections with bigger global banks, allowing your money to potentially earn extra returns without the white-knuckle risk of lending. Plus, some offshore banks, especially in Asia, are known for being super conservative with their lending practices. This might sound boring, but it translates to rock-solid stability for your money. Spread your financial wings, look into offshore banks with full reserve policies, and consider the Asian powerhouses known for their cautious approach. Remember, following the law is key. There might be tax implications, so consulting a tax pro is a smart move. Diversifying doesn't mean ditching your home country entirely. Remote account opening or a power of attorney can help you get started. Places like Singapore might require an initial visit, but offer the benefit of holding funds in a different currency and potentially a stronger bank. When looking at the top 50 strongest banks globally, only one might be American, while Singapore boasts all three of its major banks on the list. Location isn't the only way to diversify. You can also spread your wealth across different asset classes like cash, stocks, or even precious metals. We're all about staying on the right side of the law and can connect you with tax pros to ensure a smooth ride. There is a big difference between hiding money and finding better opportunities. Filing the paperwork protects your assets. The goal isn't to become a financial nomad. You'll still need local cash for everyday life. But by having some money in a more stable overseas institution, you're hedging your bets against bank wobbles like the ones we saw in 2023. Western deposit insurance limits can be pretty low, with Europe offering just 100,000 euros in coverage, for example. Spreading your money around the globe can give you some serious peace of mind. What happens if your bank fails and you have more than the FDIC's insured limit of $250,000? The answer, unfortunately, is uncertain. We saw a glimpse of this in Cyprus, where a haircut, a forced reduction in deposit value, became a reality for some account holders. This scenario isn't limited to Cyprus. Anywhere with deposit insurance limits exposes you to potential losses exceeding that limit. The bigger question lies with the future of government bailouts. Traditionally, the US government, through the FDIC, has intervened to protect depositors during bank failures. However, with growing public frustration over economic hardships, there is a cultural shift. The appetite for bailing out the wealthy may dwindle. People struggling financially might not want their tax dollars used to ensure someone recovers their million-dollar deposits. From a libertarian perspective, this raises the issue of personal responsibility. Perhaps the argument goes, those with significant sums deposited in failing banks should bear the consequences. After all, understanding the institution's financial health is crucial. Maybe a $5 million deposit shouldn't be fully insured if the bank collapses. This brings us to the potential allure of offshore banking. Some overseas banks boast stronger balance sheets and potentially operate with a full reserve model, meaning they don't lend out your deposited funds. Additionally, some banks are situated in asset havens with a vested interest in protecting wealth. The crux of the matter boils down to a potential policy shift. Will Western governments continue bailing out large depositors during bank failures? The United Arab Emirates offers a contrasting example. They have stricter requirements for banks and guarantee full deposit repayment in case of failure. However, the UAE's approach might not be replicable by all Western nations. The concern lies in the confluence of Western economies facing financial strain, a global economic shift away from the West, and growing public discontent. The author emphasizes the importance of a banking portfolio encompassing various accounts for different purposes. These overseas accounts function similarly to everyday bank accounts, allowing you to conveniently manage your daily expenses. They can be particularly useful for individuals who travel frequently or split their time between multiple countries. Countries like Georgia or Ecuador offer affordable entry points for opening such accounts. These accounts, potentially located in Singapore, Switzerland, Liechtenstein, or the Bahamas, serve as secure havens for parking your money until needed. They prioritize safety over immediate accessibility. These accounts are ideal for emergency funds or long-term saving goals. The concept of haircuts, forced reductions in deposit value during bank failures, is introduced, highlighting the potential limitations of deposit insurance. Diversification across institutions and geographical locations aims to mitigate this risk. The importance of adhering to legal and tax regulations when opening offshore accounts. Collaboration with tax professionals ensures you navigate these complexities smoothly. The discussion extends beyond simply opening accounts. Establishing a holding company for investments or an offshore trust can further strengthen asset protection. Holding companies can be particularly useful for managing investment portfolios, especially those involving international assets. Offshore trusts can shield assets from potential lawsuits or creditors. In jurisdictions with strong asset protection laws, these trusts can become powerful tools for safeguarding your wealth across generations. The potential vulnerability of Western banks is presented as a wake-up call. This vulnerability prompts a series of questions that go beyond just offshore banking. Consideration of a second passport is introduced, potentially offering a hedge against future tax hikes or government intervention. Certain countries offer citizenship by investment programs, which can be a path to acquiring a second passport. While not without its costs, a second passport can provide peace of mind and open doors to new opportunities, such as visa-free travel or business ventures in new markets. Offshore trusts offer additional layers of protection compared to domestic trusts, further diversifying your asset security. In addition to creditor protection, offshore trusts can be advantageous for estate planning purposes. They can help streamline the inheritance process and potentially minimize estate taxes. The benefits of diversification extend beyond mitigating risk. Having a portion of your money in a financially sound country like Singapore can provide peace of mind even if your home country's bank doesn't fail. Singapore, for example, is known for its political stability, strong currency, and robust regulatory environment. This can be particularly relevant for individuals who are concerned about the political or economic climate in their home country. Opening bank accounts in certain countries can unlock additional benefits like residence permits. Malaysia, for example, offers multi-year residence permits in exchange for opening an account and depositing a specific amount. Residence permits can pave the way for eventual citizenship or simply provide a secure and attractive alternative living location. The core message is that potential vulnerabilities in Western banking systems should spark a broader conversation about financial security. This conversation extends beyond simply moving money overseas. It encompasses a holistic approach to regaining control of your finances in a changing world. The focus is on understanding the limitations of your home country's system and taking proactive steps to diversify your assets and explore opportunities presented by a globalized economy. So, we hope you like our video. Then do like, share, and subscribe to our channel.